Okay, so logic is quite simple here. We've got a bearish case for rejection here for a move continuation to the downside, which is possible based on everything that we're seeing now in the 8 hour. We then have a massive inside bar here, which formed early in the week, and we've had the continuation from that. So now we've got another grouping of the oscillators right here in what should be resistance. So on the higher time frames, we're looking to see 141.20 and 14,205. If we reject this area, we're looking for inside bars, engulfing bars, or pin bars here. You're moving to the downside. Now, if we start drilling down through to the levels that you need to be watching for the trade, on the hour we've got a crossover, and we're above the 155 at the moment. So there is merit here on the lower time frame that we're going to continue, but bear in mind we've got two areas of overhead resistance that will more than likely hold us up somewhat. So I would expect if we're going to continue to the upside, I would expect us to hit our head here, bounce back, find support, hit our head there, bounce back, and possibly even 2 or 3 attempts at each of these levels. We are oversold. We have a double bottom target to the upside, which is up here. Obviously, we want to see a retest here. So 13,997 or 1400 is probably what we need to aim for. So 1400, any pullback onto 1400 and a retest of that area that's successful is a buying opportunity in my books right now, because then we're going to be looking to target these levels. If we look at the 15 minutes, firstly just from yesterday, a pretty big engulfing bar here that formed. We did get a gap close, but you can see what we bought off. And pretty simple rule here, any one of these fractals on this side of price will offer support or resistance, and you can see that's the area we got support off. Down, golfing bar, entries up there, stop is there, it's 56 points, and you can basically keep moving your stop underneath these swing lows while we're in an uptrend. So for me today, more of the same. On the lower time frames, higher time frames, be very cautious, because if you see, you keep checking on the hourly, well, not so much on the hour, but on the 3 hour chart. If you keep checking and you see pin bars or inside bars or engulfing bars forming, then it's probably a good idea to just take profit and wait and see what's going to transpire. But at the moment, any pullback should be bought, and you could possibly even just pay attention to these highs from yesterday. So long as the moving averages are like this, you're looking for a continuation to the upside on the 15 minute. So that's kind of the view that I've got at the moment, and that does also translate into the hour, but the hour is indicating that there should be some kind of a pullback shortly. It doesn't always materialize, so you need to pay attention. It's long until it's not, or it's short until it's not. So these are the areas we want to pay attention to on the 8 hour. If you start getting 8 hour closes through these levels, specifically these two here where we are now, and this one here at 14,200 or 14,205, then that level is null and void. It could very well be turned into support. So in other words, go past, come back, find support, and then continue. So pay attention to this. This could be a turn in what has been going on for the last well, basically just last week. The rest of the weeks has been sideways. So it could be just a return. It could just come back into the sideways motion. And typically, your Christmas rally does start fairly late, but that's purely because of the low volumes and lots of algorithms trading. Anyway, that's kind of my view at the moment. If we get back above 14,200, then as far as I'm concerned, we are still back in the uptrend, and this is just a little minor dip in the uptrend, and we're looking to continue to the upside. So that's a level to watch today. Hope that helps, and we'll catch up with you tomorrow. Cheers for now.